Glad to know you stay with us. And right now, it's Personal Finance with Charles Fakroha. He's right here with us. Good morning.
Good morning. Morning, Samson.
Good morning.
I knew you were going to laugh.
It's a very wonderful Friday.
You can say
What
that
did it?
again.
Is it 18th?
Yes?
Yeah, 18.
Wow. Unfortunately for me, next Friday will be what? What's the
18 plus 7,
25th.
25.
25th.
25th? Wow. I will be a year
Older.
Oh, wow.
So I'm getting my dancing shoes ready.
No problem. No problem.
And the
Yes.
cakes and the goodies.
And there will be special personal finance
Segment on that day.
No training, shopping.
No, of course, now after the shopping, there will be training. After the training, there will be shopping.
Right, that's
Happy birthday in
fine.
advance, by the way.
Yes.
So what are we looking at today?
Today, what are we looking at? There have been a lot of issues. People have argued and said there is no way they can save.
Okay.
But we have always maintained, whether you agree with us or not, research has shown, as long as you earn an income, you can save. And that takes me to what we want to discuss today.
Okay.
Naira cost average.
Okay.
Yes, that's today's discussion. Naira cost averaging.
So what exactly is Naira cost averaging?
Yes, before we go into that, we have two schools of thoughts when it comes to investing in the stock market.
Mm-hmm. Okay.
Yes, two schools of. There is a school of thought that said the market is so volatile. Don't go there. There's another school of thought that said, well, even though the market is volatile, you can invest at your own time. And you can see these two schools of thoughts, they are contrary to each other.
Mm-hmm.
There's a conflict. Now, some experts decided to see what they can do to reconcile these two schools of thoughts. And they came up with this strategy of saying, okay, how do we take care of this volatility? And at the same time, people get optimal return from their investment. Because you can't just throw away money that you have earned. And that's why they came up with this Naira cost averaging. It's a very simple strategy. And some people have even said, is it even a strategy? Because it's so simple. So, like you said, when we are investing and we think we are being rational, we are not rational. All investors have what they call greed and fear. But as Warren Buffett will always tell us, when people are being greedy, you be fearful.
Okay.
When people are being fearful, you be greedy.
Greedy.
That's a contrarian investor. And he has also said that if you cannot hold a stock for 10 years, you buy into a company, you cannot keep it for 10 years, then don't bother buying that stock.
How do I ensure the stock is one that can stay the course of time?
That's what he's telling you, that you look for stocks that are very stable, buy into those companies, and allow it to grow for a very long time.
This might bring us
Yes.
This might cause us to digress. But what of a company that divests? That leaves the country. What happens?
Of course, there are regulatory provisions how they can take care of minority shareholders. We have seen it happen even in Nigerian markets. We have seen the likes of former Mobile, which is now Double One PLC, leaving the stock market, and they took care of the minority shareholders. We've also seen, is it Titan Trust Bank now, buying over Union Bank. And from the look of things, they might not be quoted again in the market, but they've made a provision to take care of minority shareholders. So there's always regulatory provision to take care of everything. Yes, something was going to ask a question.
Yeah, because you said you emphasized on companies that can stand the test of time in terms of 10 years duration. Again, it's not a
That's his own personal opinion. No?
Yeah, yes, I know.
Which you agree with, I suppose.
Agree with, and you're basing that theory on. What I'm saying is, there's no certainty that a company would last 10 years, regardless of how strong it looks like now. I mean, because things can happen and you could have liquidity and all of that.
Exactly.
So, in that sense, it's not a given that a company will last 10 years. How much more you ensuring that your stake in that company lasts that
what he's trying to emphasize is this short-term speculating will not help the investor at the end of the day. Yes, like in the market, we have people who are day traders. They buy today in the morning and they are selling in the afternoon.
But they are making their money. I mean, that's what they are there for, just to make that money and go.
Research over time has shown that those who are steady in the market, they get more returns compared to those who come in, go out, come in, go out. Over time, 5-year, 10-year, research has been done and it has proven. And that's why we're looking at Naira cost averaging today.
All right, I think we should stay on that for now. Naira cost averaging, what does it mean? How does it work? And how can I implement it?
Now, that strategy is trying to take away emotional issues when it comes to investment. It wants to make it look mechanical.
Okay.
Now, those who are using other techniques, those who call themselves maybe technicians, they want to tell us that they can time the markets, that at a particular time, it's the best time to buy. And they get in. This is the best time to sell, and they sell. We have seen that over time. When they get into the market, the price start coming down. There are times when they sell, the price are going up. So you can see that nobody can beat the markets. You cannot have 100% to be accurate about timing the market.
But sometimes give or take, you have some percentage of accuracy.
Exactly. Those technicians they always claim that they know when to enter and know when to go out. No problem. Nothing can be 100%. So to avoid that, each time you go in, come in, the broker is smiling. Whether you make profits, whether it is beneficial to you or not, because it takes its commission. And there's a word for that, churning. They even encourage you, keep buying, because you'll be getting that commission. So we have seen this for a very long time. We're not saying that it's a good strategy on their own. Now, to avoid all that, and some investors don't even have that time and capacity to go in, come out, go in, come out. That's why this strategy has been advised for them. Naira cost averaging. And what is Naira cost averaging? Trying to remove emotional aspect, make it mechanical. So when you say Naira cost averaging, that is, the investor is expected to invest a certain amount of money regularly. If you say it's monthly, maybe on the 5th of every month, you want to be investing 20,000 Naira. Maybe you earn 100,000. And from the rule we have said, minimum of 10%. And you say, okay, you can do 20%. So you have said yes. So on the 5th of every month, you are investing 20,000 Naira. Whether the market is up, whether the market is down, that 5th, your 20,000 Naira to your broker and is investing for you.
All right, I'll take that. But, when investing, you also want to be very careful. I mean, before you do Naira cost averaging, I'm sure you probably must have considered the company's fundamentals. Yes. Or do you just, because it's Naira cost averaging, you forget about fundamentals and you just say, you know what, just buy stocks for me.
Okay. I agree with you. You need to do some little homework. I always advise that. You need to have some knowledge. But how many fundamentals can you do? And you know that even those fundamentals, economists will tell you these are lagging indicators. It has already happened. You're looking at dividend, they've already paid dividends. You're looking at the earnings per share. They've already showed you their
yes, but
it's large, it's past.
But you can tell.
But it gives you a guide.
Exactly.
It gives you a guide agreed.
Which is not guaranteed, by the way.
Of course, that will be what in the future.
I don't like you.
So what we're saying is, it's like a tool that you're expected to use. There's nothing wrong with that.
With that, yeah.
And even the ordinary investor will know. How many of those ordinary investors can do all this fundamental analysis that we are talking about?
Yeah, you just use the simple ones now.
So we are saying you want to invest in a company. Of course. The thing that comes to your mind, what is this company even producing? Okay. I don't want to mention brands now.
Yeah.
There are some brands that every day on a daily basis you make use of them.
Telco.
1.
Energy or power.
2. You can also have some
food,
consumer goods, in terms of your oral hygiene, and all that. Even in terms of cream that you use, there are companies, consumer goods. So we are not going to mention any brand.
Yes.
Now on a daily basis. So what tells you that Do you need to do any other fundamental analysis on those companies
That's part
again?
of the fundamental analysis.
So you tell your broker, maybe you have chosen 2, 3, 4. These are the companies I want to be investing in on a monthly basis.
Okay, let me come in quickly.
Yes.
As much as, yes, it looks a bit safe, like a safeguard to invest in these companies because they make use of their products on a regular, on a daily basis. We've also seen some of the companies in these sectors also liquidate, over time. I mean,
of course.
From, body treatments, as you've said, to oral hygiene and all of that.
Yes.
Some products we knew, or brands we knew about 6, 7, 8 years ago. Exactly. So there's still no guarantee that that company in the next 1 year or 2 years will still survive in that sense.
Yes, and that is why we have said the stock market investment, there is no guarantee. The risk is there. There is no guarantee, the risk is there.
Life in itself is risk.
Of course. And I have told a gathering long ago, and most of them got annoyed, but at the end of the day, they knew that was the truth. I said if you want to invest 50,000 Naira in the stock market, when we were doing that seminar was close to the lagoon. I said, just imagine you carry that 50,000 Naira and you throw inside the lagoon. That is stock market investment. And that's why they say you are part owner of the company. If it does well, you smile. If it doesn't do well, you bear the brunt with them. That is the stock market investment. So the Naira cost averaging is just trying to reduce some of those risks.
Okay.
That is not when you begin to think which company I want to buy. You already agree with your broker, these 4 companies. And this is the amount on the monthly basis. That particular, you have agreed on the 5th, that same amount. It becomes easy for you. Like I said, if the market is going up, you buy less of the shares. If the market is coming down, you buy more of the shares. And over time, you average. Compared to somebody who is waiting and trying to time, when am I going to enter? At the end of the day, might not even know when to enter or when to come out. There are experts who can monitor it very well and know, but if can
the average so very close to full year, so that
you get it. When it pulls back, you come in. Yes, there are experts who can do that, and we call them speculators. They don't call them investors because they are speculating. But we are talking to the average ordinary investor.
Okay, well, when you say averaging, I'm looking for the average in all of this. Naira cost averaging, you're saying, where is the average coming from?
Yes, the Naira cost averaging is once you invest maybe 5th of every month, that's the same amount of money. Let's say you are buying a particular company at 10 Naira. Then the next month, maybe the company price has come down to 8 Naira. You buy more.
Okay.
But at the end, maybe of a period, 1 year, 2 years, you see that you'll have averaged out everything.
Okay.
That is why it is called Naira cost averaging. It's a very simple strategy, and it has worked. What are the benefits of this strategy? That's the next question we'll be asking ourselves.
Yes.
One, it gives you discipline.
Absolutely.
Okay.
Discipline, and we already confirm here that savings is an habit. It's a you have to discipline yourself. So you know that no matter what happens, you are investing that amount of money. Another benefit you get again is automatic investment. You must have had an arrangement with your banker or whatever. You know, as soon as this money come, you just like the taxman will always do. You know, they're very sharp. They don't want to even see the money. They have taken their own. Government is very sharp. So the same apply. Why can't you also be sharper than them? Just instruct your bankers. As soon as your money comes, send to this broker. And the broker is buying for you. Then, of course, you ask him to show all the evidence that he has bought. So you have that discipline. Then you see that automatic investment you are making. Another benefit you get again is diversification of timing.
Okay, what does that mean?
Yes. Some persons wait till they have huge amount of money before they invest in the market. But you already agreed on that small amount.
Okay.
So you are buying at different timing. You are not trying to time the market. Because we have seen one individual cannot time the market.
Let me come in here.
Yes.
I understand, the notion of diversification of time, and again, for those who want to have the chunk of the money and then time the market before investing, and you who has that ready-made, and accurate timing where it doesn't change, maybe 5th of every month, as you've said.
Yeah.
Even when the market is volatile at that point, or it's down in that sense.
Yes.
It still has to be 5th.
Yes.
As a stockbroker, I'm asking because for example, they say when there's a dip, you buy the dip and then it comes up. So even when there's a dip, you still encourage that people should keep up with whatever timeline they have.
Exactly.
Okay.
That's the discipline.
Okay.
Yes, like I agree to what you are saying. Yes, we might not be too rigid. We are saying we are trying to remove emotion when we are investing. So if it is 5th, try to maintain that 5th.
But if there's a really huge, red in that sense,
that's the best time to buy when the market is really down.
Well, I mean,
stocks will be cheaper.
Stocks will be cheaper, no doubt. But I mean, for example, I'm just saying now, it's a bit different. Sometimes, like crypto, for example, now.
Okay, it's still an asset.
It's still an asset, but you've had that crypto winter since like May thereabouts, and we're in November, and it's still the same thing.
Yeah, different kind of market.
I'm just saying, it's digital, no doubt.
No, it is still assets. It is still the same thing. That's why they are saying most of the financial assets
crypto is more volatile. I wouldn't. I mean, for stock, I can still say to any largest that we can read it.
It's as volatile, but I would not say as volatile as crypto. But it is still volatile.
But
do you know what happened? Do you know what they call a Black Tuesday? Black Tuesday.
Yes.
Or meltdown in the Nigerian market.
Okay.
2007, 2008, 2009. That was a Nigerian meltdown. Where the price of a first generation bank, that is an holding company now, as high as 72 Naira per share, came down to as low as 3 Naira per share. How can that happen? That volatility is there.
Okay,
we are still seeing the building of the bank. They have collapsed.
in wrapping up this, you've given us some advantages and how to go about it. What will be your final words when it comes to Naira cost?
Yes, there are other advantages which we have not mentioned. We have even seen diversification of your portfolio.
Okay.
Yes, it makes you to diversify because every month you are buying into your portfolio.
Because we're pressed for time, would like to,
Yes, my advice will be Naira cost averaging is the best investment I will advise, investment strategy I would advise for those who are just beginners in the stock market.
Okay.
It's a strategy that will safeguard them, and when you become more and more sophisticated, of course, you can try other strategies. Thank you.
Thank you so much for your time. I mean, this is quite educating and enlightening, really. Sometimes we do not get all of the metrics when it comes to things like this or investments like this. Thank you so much, as always, Charles Frakara.
It's always my pleasure.
Thank you so much. Okay, let's just take a breather right now. When we return, we'll be wrapping up the show. Please to stay with us.